Welcome back to this week's market drama. Let's start with the stock market last week. The S&P 500 was up 2.7%. The Russell 1000 growth was up 4%, which tells you that riskier stocks definitely rallied more than the more defensive stocks or the more value stocks. Also worth noting that the MSCI EM index, which measures emerging market stocks, was up 4% last week. That puts up emerging markets up 7.7% for the year versus 4% for the S&P 500. A lot of that relative outperformance of emerging market stocks has to do with the reopening of China's economy this year, right? So that's emerging market economies are more tied to China than the US economy. So a lot of these stocks are kind of rallying in the back of that. When it comes to economic data, the big headline number was CPI for December. The headline number came in at 6.5% year-over-year growth. Core CPI came in at 5.7. These were both expected. Basically, they hit the numbers that the market was looking for. But this comes in the back of that better than expected wage growth that we saw the prior week. So the Fed will look at this as progress on inflation, on the inflation front. And if you look at expectations for Fed hikes now in February, it is that 25 basis points versus 50 basis points is priced in, right? The market is looking at the Fed to not hike as aggressively as they've done in the past. One thing worth noting when it comes to the inflation numbers is that the core service number came in at a firm 0.5% month-over-month growth. Why is that relevant? Well, you could look at, and we'll put up a chart up on the screen here. You can look at goods inflation or service inflation. Goods inflation is coming down significantly, but service inflation remains fairly sticky. And the reason is that service inflation is more tied to the labor market. And as we discussed the last couple of weeks, employment remains pretty tight, right? The unemployment rate's at 5%. If you look at the ratio of job openings to job seekers, it remains at near all-time highs, right? So the Fed is going to want to see further evidence of this service inflation cooling before it feels comfortable in taking a pause on hiking interest rates. Looking at this week, keep an eye on December headline retail sales number. They're expected to decline 0.5% month over month in December. Why retail sales matter so much? 68% of GDP in the US is driven by the consumer buying things, right? So if we continue to see a deterioration in retail sales, probably tells us that we might be facing a recession or not, right? So that's an important number. All right, that's it for this week. Stay tuned for next week.